Dear ladies and gentlemen, hello, welcome to this video. This is basically a short follow-up to a particular point I've mentioned in the last video and before, namely the Grail pattern and target runs. Okay, and in this short video I just would like to stress one particular point. You remember last time I've also shown you a post-stop run trade. Remember, a post-stop run trade is easier to trade than a target trade. And that's something people don't necessarily understand. They observe that a lot of targets get taken out, but they don't realize that the tradability of those target runs can be low. And without the live stream access, it's very low. So let me explain to you what I mean. So if you see the market causality in front of you, of course, yeah, if you have some nice empty stops up here, and this is a price chart, right? And let's say you have some shorties in the market already. Yeah. So you see that the dumb money shorties went around here trying to short down, and then their stops, their medium-term stops are here right at the high. Then of course you can of course try to trade the target run. Boom. So there's a chance that when you go long, you may do a successful trade towards those empties against the dumb money shorties, doing some kind of gray pattern in the process. Okay? However, if you see the market causality and even if you see that, for example, there is a target and you know already that eventually the target will be taken, yeah, but in this particular scenario, let's say there's some longies in the market, doesn't need to be a lot. Let's say there's some longies, okay, then maybe also have some shorties from before, but those are already in loss because they shorted down here. So these are already in loss. So those longies in the way may lead to a situation where they delay this target run. Okay. So even with causality access, you have to be careful, because even if you can see that the smart money eventually wants to take them out, if there are positions of the dumb money in the way, first of all, time range principle, there's no need to do it now. And quite often actually they go the other way and they take some counter stops. They go to the red nest where the shorties are, they price it in, and then they come back, for example. And along that process they take some empties of the dumb money shorties, killed. You understand? So just because you see the targets, that's not on its own a trade setup. Understand that. For target trades, target run trades, you need to have several factors on your side, otherwise it can take a long time, or there can be counter moves. Apart from the fact that the targets often get moved around. Now, when you do not have access, you don't see the causality in your blind, you don't know. That's the most difficult thing, to try to trade target runs themselves. Because even if you see Grail or Plateau or whatever, or this has an even number, yeah, 1.2, whatever, it can be that they do not take it at all. It can be that they take it much later. You understand? Now, this is too much of a difference. This is not, you know, so, and if you do not believe it, so I suggest you create an EA and test it. Okay, for example, you tell the EA, you can use certain tools or indicators which define those kind of targets. For example, you can take the high and low to make it very simple. And then let's say you got some signals from the EA. Okay, some buy signals here. Out of experience, and I've tested those kind of strategies a lot, I can tell you that even if you try to tell the EA, look, there are certain conditions. In order to take this long trade, the target should be closer than, let's say, 50 pips, right? So the distance from the target to the signal, let's say, should be max 50 pips. Otherwise, skip the trade. So use it as a filter. I can tell you, out of experience, a lot of testing in that area, that this is not enough to create a profitable trading strategy. Why? Because neither the pattern, the potential gray pattern, nor the target level on a higher time frame is enough to place or filter a trade. Whether this target will be really taken in the end and when that happens, and that's obviously the relevant factor for any trading strategy, whether manual or automated, depends on the causality. Statistically, there's no edge, you understand? And I'm explaining that because it applies to a lot of other phenomena as well. Okay, I've done a lot of testing, and there's no need that every one of you has those findings on their own. Okay, so let me already explain it to you. So that means, to make a very long story very short, okay, and post-stop on trades is a different story, failed reversals is a different story, fake outs, breakouts, pullbacks, etc. may also be a different story. But when it comes to target runs, and I know that when you open any chart that I mean, you'll see a lot of those constellations where you say, come on, if I go back in the chart, they eventually close those targets, yeah? And some people call those spikes or long bars or liquidity gaps, etc. Even if eventually those targets at some point in the future get killed. Price can't go backwards. That's what we're going. Even then, this is in no way enough to place a trade. And I would like to emphasize that because you often see on forums people showing that, and that's often retrospectively. They show, oh, look, this target has been taken now. It was obvious. No, it's not. Why? Because, surprise, surprise, what you need in order to place a trade like this is that. In the best case, you have some nice empties there. Medium-term stops, the yellow lines, the causality. In the best case, also some short-term stops also. Like a nice cloud, stops together. In the best case, on the opposite side, you do not have a stop of the longies, because that would mean that they like to do a pre-stop hunt counter move. You don't want it. If you want to place a trade, what's this? You don't want them to clean that out first before they go up. If that was there and they cleaned it up, that could be a nice entry towards the target, obviously. Okay? But if the stop is there and has not been taken yet, be careful. Don't just trade towards the target. It can happen sometimes, but it's not the base case. Very often, they do counter moves or go flat and then go up. You understand? This is the things you should know. And if there is no counter stop, you know, potentially it could be a trade, because I mean, you have a target and you have a nice cloud, but as I said, that's not enough. Even that is not enough. I recommend that you take into account the money flow, the money positions, older ones and new ones. Okay, if you have here some longies, and in the best case some new longies as well, you know, sorry, shorties, excuse me, shorties, yeah, the money shorties, red is always shorties, green is always longies. If you have the money shorties coming into the market and there were already some before, you see, so those guys, they entered the market around here, those ones came now here, that's a good combination. So if the previous counterstop has been taken or there is none, or not a good one, the old shorties and some new shorties come in, even if you have a bit of longies in the way, they just delay the target run. That's okay. See, then you may consider, obviously considering taking into account the new situation, the longer time frame and other factors, etc., etc. Then possibly this could be a trade. Okay, let me stop here, otherwise I go off the rails. Just a simple point I wanted to emphasize. Stay safe, have a great week.